In this presentation, we will continue on our comprehensive problem for January 16th. We're going to pay cash for a year's worth of insurance. For more accounting information and accounting courses, visit our website at accountinginstruction.info. So we're going to record that journal entry in the general journal, post it to the general ledger, and then see the effect on the trial balance. So we're going to purchase insurance here. We're going to purchase an entire year's worth of insurance on January. We'll scroll up and ask our first question for just about any transaction, and that is cash affected? We're going to say, yeah, we paid cash for insurance. Cash has a debit balance represented by the fact that it does not have brackets. We need to make it go down, so we're going to do the opposite thing to it. So we'll copy cash, right-click and copy. Going to scroll down to our journal entry. We're going to put it on the bottom, just to be in the tradition of putting the credits on the bottom in cell C26. Right-click and paste. 1, 2, 3. Then I'm going to indent that by going to the Home tab, Alignment, Increase Indenting, probably done on your worksheet already. We're going to go to the credit side, and how much did we pay for the insurance was $5,000. It looks like, nope, it was $12,000. 12,000, so I'm going to put negative 12,000 to put a credit of 12,000. Then we're going to go in the debit side in D25. There's got to be some debit. We're going to put negative of this number, or just a positive 12,000. I'm going to take that number and flip the sign to give us that 12,000. What will that debit be? Now this one's a little bit tricky because you'll see if we look at the trial balance, we'll say, if I go top to bottom, I see something with insurance there called prepaid insurance. And if I keep going down, I see something with insurance here called insurance expense. Which one should we use? Well, this is going to be one of those cases where insurance is always something that we will have to adjust for. Now, in practice, if you pay month to month, you might have people that are just expensing the insurance. But in theory and in practice, most of the time, because you're usually paying for more than 1 month worth of insurance, then you put it on the books as an asset. Why? Because we haven't yet consumed the prepaid insurance. By definition, insurance is something you pay for before you get the coverage, before you get the benefit of insurance. Especially if you pay for an entire year, we can imagine what would happen if we put it on the books as an expense. It would show a year's worth of insurance in the month of January, and when we compare January to February, our net income would look much lower in January than February, unfairly so to January. It wouldn't be a good comparison of our actual performance because the insurance we bought in January is not just for January, it's for February too. And therefore, in order to be fair, in order to have comparison, in order to make decisions, we want to even that comparison out when we judge performance of the company. So how do we do that? Well, we're going to put it on the books first as an asset when we purchase it, and then we'll do the adjusting process. The adjusting process, not fixing an error we're making now, but the adjusting process being just part of the process, that we're going to figure out how much has been used in that month and consumed and record it in accordance with the matching principle. So prepaid insurance is an asset. It's something we paid for and we're going to get use of throughout the future. Like all assets, it has a debit balance. We're going to make it go up by doing the same thing to it, another debit. So in L9, we're going to right-click and copy. Scroll back down. We're going to put that in C25, right-click and paste. 1, 2, 3. So here's our transaction. We're going to post this to the general journal now. So here's the prepaid insurance. Here it is up top, prepaid insurance. We want to record that in the general ledger. To do that, I'm going to freeze the panes. I'm going to do it a little bit faster now because we've been doing this a few times. Going to scroll up, going to scroll to the right. So we just have B flush. Going to put our cursor in F1, then go to the View tab, Windows group, freeze panes, and freeze the pane. You don't have to freeze the pane to do this. It just makes it a little bit easier to see and move around. So once again, we're looking for that prepaid insurance. Here it is. So it's what, 1, 2, 3, 4, 5 accounts. So if we scroll to the right, it'll be, we have cash, accounts receivable, supplies, prepaid rent, and prepaid insurance. So we want to be here on the debit side in S28. S28, we want to pick up that 12,000. So within S28, we're going to say equals, point to that 12,000 and enter. So that brings the 0 up by 12,000 to 12,000. If we go just to the left of the frozen panes and scroll to the right, We'll pop back over. We'll see we are out of balance. And we can see that the prepaid insurance is going up by that $12,000. Then we've got the other side of it, cash. So cash is here. Scrolling back up top, we can see cash is here. We want to be on the right side, on the credit side, because cash is going down, and we're going to do the opposite thing to it in order to make it to go down. Within P12, we will say equals, point to that 12,000, and enter. So we had to do a little bit of scrolling to get that. It went from 43,000 debit down in the credit direction, doing the opposite thing to it, to 31,000. That 31,000 then is on the trial balance here. What is the effect of this transaction? We can see that prepaid insurance, an asset, is going up, and the other asset is going down, cash. Nothing has really happened in terms of the income statement yet. We've got one asset, and we exchange something of equal value, we perceive, of course, because it's a market transaction, and nothing yet has been consumed for us, and therefore no effect yet on the income statement. When will the income statement be affected? In the adjusting process, we're going to look at how much of that insurance has been used, how much of the coverage has passed. In order to help us generate revenue, we will expense it as that coverage is consumed in accordance with the matching principle. For more accounting information and accounting courses, visit our website at accountinginstruction.info.